There's a lot of discussion about it. There's some movement toward it. That's the G20 meeting. It will be in Buenos Aires. It's a big crowd, obviously. I'll be there. Secretary Mnuchin will be there. A lot of people will be there, John Bolton, and so forth and so on. So all I can say is I don't want to get too far ahead of that story. There may be a meeting, but it has not been set in concrete as far as I know, nor has the agenda been set in concrete. They have lots to talk about, so we'll see.
Larry, is the Fed loco?
Is the Fed who?
Are they loco? Are they crazy?
Is the Fed crazy? Is that an institutional question or a personal question?
I'm guessing you've heard the president's comments on this.
I have. I spoke to him yesterday for a while. Look, president has, his own views. He stated them many times. There's nothing new here as far as I can tell. We all know the Fed is independent. The president is not dictating policy to the Fed. He didn't say anything remotely like that. And as I say, they are independent. They're going to do what they're going to do. By the way, one little factoid here. The Fed has raised.
Larry, IPO over here.
The Fed has raised their target rate 7 times in this new cycle. Some under Yellen, some under Jay Powell. And Jimmy, I looked at the stock market. The Dow Jones is still up significantly. 40% since the election during that period when they raised rates 7 times. So look, I believe there's agreement here that strong economic growth does not cause inflationary and does not cause panic increases in interest rates. I think yesterday, my own view is it's a normal correction in a bull market. The economic numbers are superb across the board. I mean, just this past week, we not only started it with a good jobs number, the ISMs were spectacular. The small business confidence was spectacular. We had a low inflation number today. Paychecks are getting fatter. Blue-collar workers are going back to work. I'm saying this because the economy is very, very sound. And although I'm not here to predict the stock market, Lord knows, the reality is if you have a strong economy, that will provide confidence for stocks, but corrections come and go. The president said that yesterday. He said this was a long-awaited correction. So I'll just leave it right there. I think he's on target. And by the way, I think Jay Powell's on target. There's no reason why economic growth has to cause inflation. And by the way, Jimmy, as you probably know, you all probably know this, you've had an increase, year-to-date increase of, 60 basis points in the 10-year Treasury. That is a growth factor. If you look at it inside the TIPS market, most of that is the real interest rate. It's not an inflation premium. That's a sign of economic health. That is something to be welcomed and not feared.
Well, Larry, look, I share your constructive approach to it, and yes, the market is definitely up. I am worried about some near-term issues, chemicals, some housing, worried about lending. Some of the basic building blocks of semis and railroads. And what I'm thinking here is that it wouldn't be so bad for the Fed to look at some of this near-term data, maybe say, listen, we've got to get the tariffs through the system. People have to move their stuff out of China, build things elsewhere. We can take a harder look, say 3-6 months from now, because we've done our job and our job is working. Would that be so wrong to take that approach?
Well, I don't want to get, second guess them on the sectors, Jimmy. There's nobody smarter about that than you are. I don't want to second guess the Fed. They are independent, okay? And I'm just saying that I think my opinion, personally, they have handled the transition from ultra easy money, which many of us thought was not a great idea years ago. But they're transitioning to something more normal. What's really going on is that low tax rates on individuals and businesses, a massive rollback of costly and burdensome red tape and regulations, a terrific comeback in energy, which has been fostered by deregulation. These are the key factors driving what I call the new Trump economy. And they are taking over now from all this ultra easy money, which was probably, I don't want to even go into whether it's helpful or not. You're seeing a transition. And the economy is going into one of the best business investment booms we've seen in years. We had none of that in 2015 and 2016. Cap goods, right? plants, equipments, buildings, structures, technology, campuses. We're seeing all that develop as a result of a new opening of the economy through the tax and regulatory reductions. And that's going to carry this, in my judgment, for several years to come. Blue-collar workers, we're seeing the best gains there since the mid-1980s, when I was a Cub Scout here for Ronald Reagan. Lower middle and middle class salaries and wages are actually rising faster than the upper end. I'm not opposed to the upper end. You know me. I want everybody to get rich, and I want the non-rich to get rich. I'm just saying all these things are shaking out beautifully right now. So I don't want to be pessimistic on the economy. You'll draw your own conclusions on stocks, but I think this picture looks as good as it looked in years.